To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 30th day of September, 2019. Thanks so much for joining us, and my apologies for it being Monday, but sometimes Monday there's a hitch in the giddy up, and well, that's why the show that normally starts at noon, roughly, started a little bit late today, 15 past. You know, in the grand scheme of things, that's not bad, right? Just tell me it's not bad. All right. Either way, we're glad to have you here, whoever you are, wherever you are. We're just glad you're right here, right now. I'm going to put up a chart of the S&P 500 E-mini Futures. If you cannot see the chart, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. There will be days that you're out of the office, away from your desktop, and you still want to join the show, which is admirable, honorable, and yes, even noble. So grab a browser, any browser, point it to youtube.com/CFRN, facebook.com/live. And there you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right, this chart, 30-minute chart, S&P 500. These are zones from last week. This morning at 6:15 a.m. Eastern, all of our traders, partners, passport holders, they looked to their inbox, and lo and behold, there they found, as they do each Monday, this week's weekly trading zones. We make sure the traders have them before Wall Street even wakes up every Monday, so they can get them on their charts and they can start to do their business. And that business is providing a framework in which our traders will operate for the entire week. Once we publish the zones, as we've done since December 14th of 2009, once we publish them on Monday morning, we don't change them for the entire week. We don't massage them, we don't manipulate them. They are carved in stone. And again, what they provide is they provide a framework of what we're going to be doing in the coming week. What we're going to be doing is we're going to be going from zone to zone to zone. Now, I can only say that I've watched live in real time this little drama unfold for almost a decade. But if I look at historical charts, I can see that the principle, the concept, the fundamental goes back to the inception of the markets. So we know that past performance is no guarantee of future results. But I got to tell you, number one, just being able to look back at a decade of our own work and see what we see, that's very comforting. But then when I look way back into the way back, and I'm not just talking futures, I'm talking equities, I'm talking everything. I'm talking the rhythm of the market, okay? It's always been here, and best I can tell, it always will be. And I promise you, if the rhythm ever changes, I could be one of the first to know, and I'll make sure you're the second to know, okay? Okay. All right. Let's jump to the numbers real quick because we got a late start, and I know Michael may have some things to do, so we'll get him in for a recap of everything that happened in the live training room this morning. Let me refresh my data so I give you up to the minute current pricing. We're going to start here in the U.S. These are the cash markets, starting with the Dow, currently up 158 points, NASDAQ up 48, S&P 500 up 19, and the Russell 2000 up less than a point. In the commodity basket, crude oil down 66 cents, trading 55.25 last. That's a drop of a little over 1%. Gold down $30.90, trading 14.7550 last. That's a drop of a little over 2%. In the Asian markets at the close, the Nikkei was down 123 points. Shanghai was down 26. Now for the Shanghai, that's almost 1%. And the Hang Seng posted a gain at the close of 137 points. And in European markets at the close, the FTSE was down 18. The DAX was up 47. The CAC was up 37. No movers, no shakers there. That gives us a mixed day in Asia, a mixed day in the UK, and so far it is a big green Radio Monday here in the US of A. Have a little bit of news for you, but we'll hold off on that. Let's go to Michael right now and get that recap of everything that happened in the live training room today. After that, I'll be back. We'll take a look at the Concierge Trade Alerts from last night. We'll take a look at the Logic 247 alerts. We'll talk to John, and of course, we'll answer all of your questions. Michael, take it away.
All right. I got it. All right. Good afternoon, everyone. Today is Monday. Wow. It's Monday, the 30th day of September 2019. It's the last day of the month and the last day of the quarter. Yeah, trading was kind of rough today. I'll get into that in just a minute. But anyway, if you have not taken a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial. Apply.cfrn.net. If you click on that, you'll be brought to this page. It says eminitrainingschool.com. You can go directly to eminitrainingschool.com if you want to. And down here where it says 1 week free trial, put in your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button. Once you hit the send button, you'll be sent a confirmation link. Okay? You'll be sent a confirmation link. All you need to do is click on that link, and then we know that you took the free trial, and then we can send you all the information that you need to get into the free trial. Okay? Okay. Oops. There you go. Bring that back up. Here it is. Results. Today, I'm telling you, today and Friday were both rough trading days for me. We ended up plus 202 on Friday. We ended up plus 110 today. Today, as I said, is the 30th day of September 2019. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today, we lost 7 ticks in crude. We made 18 ticks in gold. That put us plus 110. It took us just about the whole morning session to do it. Took 115 minutes, which really is the whole morning session. And 18 trades to get to $110 a contract. And we took a total of 18 trades this morning. So we're going to end the month with plus $3,663 gross. Now, if you were to have an $8 commission, your net profit, if you did everything exactly the same way I did, would be $19.67, and with a $5 commission, it'd be $26.03. Okay, so that's over 19 days, averaging $192 per contract per day. On the year now, we're at $28,431. That's over 175 days, averaging $162 per day. Okay, $162 per day. So we had a bunch of trades this morning, but let's go take a look at what we actually did do. Now, right here, we started out with a mistrade right here on the gold that could have probably gotten us our goal for the day, 90.6 up to, yeah, it could have gotten us our goal for the day if we'd have gotten into that trade, but we missed it. We had a break even here, a break even here, a break even there. We didn't get filled on that one. That could have gotten the goal for the day as well. We did get filled on this, and we stopped out to the tick, and then it went down and did what it should have done, and the green line got down into the cycle. Then we had a break even there, and on this one, we picked up 6 ticks, and on this one, we picked up 1 tick. And then over here, we picked up 6 ticks to put us at plus 5. We missed that short right there. And here we picked up 5 ticks to put us at plus 10, and then 8 ticks to put us at plus 18. Okay, then we get into the break, and during the break, it looks like there was a long trade from right here in there. And then it spun around, and it looks like it gave a shorting opportunity right here that probably would have stopped out. And turned around again. It looks like it's trying to go long right now. But there were a lot of trades today on gold alone. We had 10 trades. Now let's see. The euro. We had missed a trade right here that would have given some profit. Then we picked up 8 ticks there and another 8 ticks there to put us at plus 16. Then we stopped out, minus 8 ticks, put us at plus 8. Stopped out again, minus 8 ticks, put us back to 0. And that was pretty much it on the day. It looks like, we weren't really trending here, so we wouldn't have taken a long right there. That was during the break. Crude oil, we had A bunch of trades on crude too. We started out on crude with the stop out right here, put us at -8, and I missed the long trade right there. I picked up one tick there to put us at -7. We had a break even, missed a short, had another break even, and missed another short. So we had just a lot of opportunity, but sadly, we ended up -7. -7. Okay. I'm not sure which mic is open. But anyway, on the ES, we didn't have anything today. The ES started out right in a weekly trading zone. Okay. And it had a really hard time getting away from the zone. Didn't give us any trade setups at all. And we get into the break here, and it started moving as we approached the break. It started to move a little bit, but it still didn't give any trade setups. So that was the ES. Now gold is given a long right here, 78.3. Okay. All right, back to the spreadsheet. If you're going to read the spreadsheet, you're going to read all the CFTC risk disclosures down at the bottom. Today is the 30th day of September, 2019. Today we lost 7 ticks on crude and made 18 ticks on gold to put us at +110 on the morning session. Today it took 115 minutes and 18 trades to get to the goal for the day. At that point, we're up 110, and we took a total of 18 trades. So, those are gross numbers. The gross monthly profit right now, we're going to end the month with $3,663. It's over 19 days, averaging $192 per day. On the year now, gross profit is $28,431. That's over 175 days, averaging $162 per day. $162 per day. Now, if you have not taken a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial. Apply.cfrn.net. You click on that, and you'll be brought to this page where all we ask for is your name, your email, your phone number. And you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. Once you click the confirmation link, well, then we know that you took the free trial. And then we'll send you all the information you need to get into the live training room in the morning. Okay? All right. And that 78.3 ran up to 79.2 for a 9-tick gain. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Okay.
And here we go. Alrighty.
Here we go.
Recap of the recap.
Today, it took 115 minutes and 18 trades to get to $110 per contract.
That was an uphill climb, huh?
Oh, yeah. It was. The markets were just horrible this morning. But they loosened up once the European markets closed. They seem to have loosened up a little bit. So that's a good thing. It's a good thing.
Okay. Now, what Michael just said, there's a 30-minute period every day from 11:30 Eastern to noon where we often see a pickup in activity, or possibly some days we even see a reversal during that time period. And it's not just because we're closing the live training room. I think the fact that the London markets closed at 11:30 a.m. Eastern, I think that really has more to do with it than us closing the room. But keep your eyes peeled, whether you're a partner, passport holder, part of the CFRN family or not. Just know every day as you're trading, and maybe you don't even look at foreign markets, you don't do Globex, you're just not into that. Okay, just know that when the big hand is on the 11, now that's the little hand, the big hand is on the 6, there's a chance that you'll see an increase in activity, which could lead to more movement during the afternoon session. When that period of time, that little 30-minute period, when that's really kind of quiet, benign, if you will, the afternoon session tends to be a little quiet. What it is, London traders are closing out their positions for the day, positioning themselves, for the upcoming session, for the Lobex session. So as everybody's, rearranging those deck chairs, on the deck of the Titanic, you might be able to take advantage of that. Now we can see here at 11:30 today, from 11:30 to noon, all we did was print a doji right inside of a weekly trading zone from last week. And I just typed it on the screen and make sure everybody can see it. All zones you see are last week until this Thursday. Now, the reason behind that, guys, we do like to share the zones with the entire CFRN family, because on Thursday, when I give the zones to the entire community, if you jot the numbers down, you'll see that they can become incredibly useful the following day, Friday, Sunday night, Globex Open, Monday, Tuesday, until the new zones kind of settle in and take over. Example here, if you had jotted those down last Thursday, I think I gave them out on Wednesday last week. This was the close on Friday. We had a closing price Friday on the S&P of 29.68.5. We opened last evening at 29.76. Okay, so a little bit of a gap, which we just see as an incredible gift from the markets. On Sunday nights, we often do see a gap in futures and the indices. We don't typically see one every day, because when the market begins a new session at 6 p.m. Eastern, see, last night at 6 p.m. Eastern, that began the Monday session. Tonight, Monday night at 6 p.m. Eastern, that begins the Tuesday session. So since the markets have only been closed for an hour, unless we're in earnings season, there just hasn't much happened. No news has come out anywhere that moves the markets to any degree, tradable degree. But Sunday night's a different story. We more often than not do see a gap on the indices, S&P, Dow, Russell, and Q. Typically, if you get it on one, you're going to get it on all four. And our Sunday night go-to trade is the gap fill, which is right here. Okay, this was the opening candle last night. This was Friday's close. Closed here, open here. So we immediately put out alerts, Logic 247, giving the numbers, the entry, the target, etc., that would in effect close the gap. And so in the second 30-minute candle last night, we did exactly that. We closed the gap, S&P, Dow, Russell, and Q. So 4 nice trades to get the week started. All right, Michael, recap of, you already gave me the recap of the recap. Yeah. That was the uphill climb. Okay.
Yes, it was. It was complicated today. It was on Friday, too. Yeah, both days.
So we gapped higher last night. And what did we run into? Weekly trading zone from last week. That sent us back to do the gap fill. Once that was completed, back up to that same zone overhead. We'll pull back, zone overhead, deeper pullback. Now, right here, when we couldn't get all the way back to that zone from last week, and we printed this green, I call that little setup there the Twin Towers. It's not a perfect example. It's just some little made-up name that I gave it when you have 2 identical candles, except one's red, the other's green, or it could be green and the other red, and they're mirror images of each other. These are off by like maybe a tick or so, but that's a good indication that price is about to attempt to, in this case, move higher, which it did. And as we got back to that zone at 79.80, we consolidated. Now these are 30-minute candles. Let's look at it real quick on a 5-minute chart so you'll see the consolidation a little clearer. Okay, so we hit the zone, and remember, now these are 5-minute candles, so we got, well, there's 1, there's 2, 3, 4, 5, 6, 7. So 7 30-minute candles, 35 minutes consolidation, and then we begin the trek higher. If we back up just a bit on the 5-minute chart, there we are approaching that zone. And that takes us back into last night. Thought I would walk you over to where we first hit it. It doesn't want to cooperate. That's all right. I just wanted to show you, when you see one candle or two sitting on a zone, if you're on a 30-minute, you got to remember a lot can happen inside of a 30-minute candle. And this 30-minute candle simply gave us 6. No, this candle gave us 5. 5 times 6. Okay. Yeah. One perfect 30-minute candle right inside the zone. You saw what it looks like on the 5-minute. Okay. So now we're above this zone. So what happens now? All right, let's talk about that. Let's go back here and let's figure out, yes, we closed the gap. Was there anything else at work? We'll see. We'll put these on. And there we go. Okay. So what happens is price runs into the zone, and when we approach a zone from below, we expect it to be good resistance until it isn't. This is what until it isn't looks like here. So we come off, we hit the BBC. It stands for bull bear cross. It's that simple. Just remember it like this. When price is below the BBC, we anticipate lower prices. And when it's above, we anticipate higher prices. Okay? So we're above it. We gap above it last night. Anticipate higher prices until we reach a spot where we anticipate good resistance, which sends it back to the BBC, where we consolidate, make a run once again at that zone overhead. Missed it by a tick, 3 ticks. Yeah, 3 ticks. Back to the BBC, where once again it's good support. Back up to the zone, where once again it's good resistance. And then here, we close below the BBC. We open below it, and we even close again. So if you were to assume a short position, perhaps could be here. But even if it were here, as you take out the low of those two candles, we'll call that 29.69. Swing low was 64.5. So nice little 4-point move. Then buyers step in, get us back above the BBC. Once we're back above, see here we're anticipating lower prices. Back above, we're anticipating higher prices. Back to the zone where we consolidate. Market is making up its mind. It's taking a survey, if you will, of these folks, the buyers and the sellers. This is what we call order flow. This thing is the DOM, depth of market. How deep is it? Well, here you got 2,600 on the bid, you got 4,000 on the ask. That's probably the largest discrepancy I've seen in a while. I don't look at it very often, and I don't trade based upon those numbers, only because those numbers don't accurately represent how many contracts are for sale and how many contracts there are orders in to buy. Gives you some kind of an indication, but there's this thing called iceberg orders where you can hide part of what you're trying to sell. If you're trying to sell 1,000 contracts, you might not want to spook the market and put all 1,000 up for sale at a time. So you can use the iceberg where you might only show 50 of those 1,000 contracts you're trying to sell, so you don't spook the market. So somebody buys those 50, and then the computer, you've programmed it to just slip another 50 right in there, and then another, and then another, and people are going, man, where are these coming from? Well, now you know. That's where they're coming from. So, now these numbers, we're heavy right now on the ask side, or the offer, as it's called, but that can change in a nanosecond. We could, a minute from now, we could see 4,000 over here and 2,000 over here. So it's all changing very quickly. Not so quickly during the Globex session, but during the day session, and certainly during the open of the day session. Okay? All right. So price pulls back here. Let's scrunch this up a bit. Why here? Why here? Why did it turn here? Why did buyers come in here hot and heavy to move this thing up? Well, if we go back to the 26th, we can see the price came down to this area, which corresponds with this area right here. See, we have a bullish cross there. Now, wherever you see a bullish cross or a bearish cross on a 30-minute chart, that's an important price, important area to us. Let me do that. There we go. Okay. All right. So we had a bullish cross. Buyers are making a statement here, and they do in fact run it higher. So when price comes back to that area, see, use an example, shoes. Shoes are on sale here, tennis shoes, 20 bucks. Buyers swoop in, they clean the store out. Prices are up here. New shipment comes in. Shoes go back on sale at 20 bucks. Well, everybody that didn't get to buy some at 20 bucks here, they're certainly going to try and buy some here because they got that price again, right? Now, there are also some people who bought the shoes. They like the shoes. The shoes were very good to them. And so, oh, what, another opportunity to buy shoes at 20 bucks? I'll take it. So off we go again. This time, when we hit it here, look at that wick. So the same dynamic at work. However, at this point, the order flow, which we were just looking at, is now heavily weighted with sellers. So even though we catch a nice bounce off that area, we come back through it, and then we rally, and then we come back to it. And when it comes back to it here, you expect that to be good support until it isn't. But it was. The buyers did come in. They did run it back up. They've now taken out the previous swing high, 29.80 and a quarter, and they ran it up to the price, the area, if you will, of the last bearish cross. So we're consolidating again. The market is inventorying the buyers and the sellers. Is there enough buying strength to go up and challenge this previous swing high? If not, price will return to this area here, last week's zone. If that can't hold, we'll drop on down to the BBC. If that can't hold, well, then we're off to test this swing low again. If any of those that I just mentioned do hold, and we can get through this obstacle, the next obstacle in our path is there, and then the zone overhead. Now, keep in mind, what you're looking at are last week's zones. I think you can see how they're still in play, right? But our traders, partners, passport holders, they've got this week's zones. So they're working with a little bit different set of numbers, okay? And so will you when you become a passport holder, or a partner, which you can do by simply calling 949-42-EMINI. Ms. Valerie will be happy to send you out a price sheet and a spec sheet, and we'll welcome you to the family. All right? It's that simple. You can also email her support@cfrn.net. Price sheet, spec sheet, please. She'll get it right off to you. Okay? Now, let's look at last night's. You know, we always start with the concierge. Let's start with logic today. Let's do that. Okay. I have it right here. Right here. Okay. All right, let's start. Guys, when you see this update telegram, when that shows up on your telegram, just always click it. It takes this long. And then you got to reopen it. Oh yeah, I thought it opened by itself. What do we update? Bug fixes, etc. Okay. All right. So now we go back here and here. I'm going to show you last week's results. That'll be the first thing I show you. As soon as I get back to it. Here we go. Okay. So last week, week 60, we finished it up. 44 total alerts. I think I said in a video yesterday that we had 60 alerts last week. I misspoke. We had 44, as you can see. 4 of them never triggered. 36 found their price target. 4 of them got stopped out. So 10% of actionable alerts last week, were stopped out. Okay. Now, that brings us to this week, week 61. Good evening. Welcome to Globex. We go to work Sunday night, 6 p.m. Eastern. We keep the pedal to the metal all the way up through Friday afternoon, 5 p.m. Eastern. You may get an alert at 2 a.m. and you may get an alert at 2 p.m. The alerts are clock agnostic. You'll get an alert when opportunity develops. Doesn't mean it's going to trigger at that moment in time, but the opportunity is there. So then you just have to patiently wait for the trigger. Sometimes that's 15 minutes. Sometimes it might be 15 hours. Usually closer to 15 minutes, but a couple, 3, 4 hours, probably the norm. All right, so coming out of the gate, short the ES, gap fill. And when I put gap fill on the S&P, I don't necessarily type it in on the Dow, on the Russell, and on the NQ, but it's the same concept. Okay, so we already looked at the S&P gap fill. And now we'll look at the Dow. Okay, there's the gap higher open. There's the gap fill. On the Russell, there's the gap. There's the fill. And on the NQ, there's the gap. And there's the fill. Okay. All right. Now, after that, so 1, 2, 3, 4. After that, we had a short on crude, 56.10 down to 56. Trail if possible. Remember, price is always trying to get to a weekly trading zone from 6 p.m. Sunday night to 5 p.m. Friday afternoon. Price is always trying to get to a zone, either the one overhead or the one below. So on this one, which went out 3 minutes after the opening bell, the times that you see here are Pacific. I'm in Phoenix. 8 months out of the year, we're on Pacific time because we don't do daylight savings time. And we're just 1 month away, 1 month away from us getting our 4 hours of Mountain Standard Time. which means the opening bell on Wall Street for me will no longer be 6:30, but for 4 glorious months, it'll be 7:30. Yay. All right. So let's look at the crude and see what happened there. Okay. Let's try that again. There we go. Okay. Last night, the opening right there. That's the opening candle last night. So we closed Friday at 56.18. Gapped higher on the open last night. We opened at 56.19. So again, close 56.18. Open 56.54. I misquoted that. The open is 56.54. Top of that candle is the close. Top of this candle is the open. So we had a pretty decent gap higher open there. We knew that after we fill the gap, we would run into what would potentially be good support, weekly zone, and the BBC. And so it was. It held as good support for 1, 2, 3, 4, about 5.5 hours. And while this is happening, there is no high probability trade setup. Once this candle closes below that zone, below the BBC, then you even have a open and a close, open and a close below that BBC. Well, now we can say that price has just shown us that it is now trying, remember on the gap, it was trying to get to the zone overhead. But when that didn't hold, we come back to neutral territory. Market's got to make up its mind. Once its mind is made up, we can see that it is trying to get to that zone below. It's still trying to get to that zone below as we speak. So that covers the crude. Okay. So we had S&P, Dow, Russell, NQ, crude, copper. I think I still have the copper chart up. I do. Come on. There we go. Okay. So last night, crude open, or copper opened right here, and the alert was to be long 26075 to 26175. The swing high was 26185. Now, when copper moves a penny, here, price of copper, $2.61.5, $2.6150. When price goes up 1 penny to $2.62 half, that's a 1 penny move. It equates to a $250 profit or loss from that move. If you're trading 10 contracts, that's $2,500, but you're only trading 10 if you've earned the right. Okay. All right. So that covers copper. Next, long in the S&P. Okay. Remember, on the S&P, our first move was the gap fill. Here.
Hello.
Price. Hi, John. Welcome. I'll be with you in just a second.
Thanks.
So we had the gap higher open that we discussed. Price pulls back to the BBC as we discussed. We find good support as discussed. So that's the long trade that takes us back up to the zone overhead. We do know that in important prices and important areas are almost always tested. So we go from 73 up to 75. We go all the way up to 78 and a quarter. And we come back to 73. We go back to 75, back to 73, back to 75. Important prices, important areas, almost always tested. All right, so we'll stop right here on number 2718. And after John and I finish talking, we will pick up where we left off here with the logic alerts, and then we'll also cover the concierge trade alerts. So again, John, welcome to the show. Hope you had a great weekend.
You too. Thanks very much.
I bet you.
Obviously, look, this late rally on Friday, anytime you get a late rally on a Friday, it's a good thing, 9 times out of 10. And secondly, I did say be careful in case this Chinese thing got reversed or denied. It looks like it got denied, and that was part of the reason why the market's recovering.
Right.
It looks as if this impeachment thing, at least the market is treating it as a storm in a teacup, and it doesn't seem to be.
You don't think it's gaining any traction at all?
I think, look, I'm not ruling anything out. Unfortunately, I think Trump went in a little bit like a bull in a china shop. Probably shouldn't have done it, but it's done, and they got to get through it. But at the end of the day, it's a trumped-up deal.
I see what you did.
The fact that they changed the rules to allow this sort of hearsay whistleblower is just a lot of bunkum, and then the transcript really was pretty benign. So
what do you think they'll be teaching our kids, John, 20 years from now when it's time for history class? How do you think historians? Now I understand that, and we got a lot of liberals writing the history books these days, but I mean, even let's say you actually could find a neutral party to write the history book 20 years from now. How do you think this will be viewed?
Probably an unfortunate period, kind of pretty pathetic.
Yeah, there you go. I think that's you nailed it right there. Pretty pathetic.
Yeah, I mean, look, these Democrats. I mean, all this nonsense about California trying to stop the wall being built. I mean, are they nuts or what?
Have they not walked down their own streets and seen the wreckage? The human wreckage that's taking place.
This is one of the biggest problems the country has. It's just no getting away from it. And you got all kinds of people coming in unchecked. There's probably potential for increase in crime. Other things that are even worse, and it's got to be controlled. I mean, it's just crazy. The Brits have got the same problem, and they're surrounded by water,
that's a long swim. Really, it's not like the Rio Grande.
I mean, this is like the people coming from every country on earth to the U.S. It's kind of like a lifetime.
But yet, John, we're bad. We're evil. We've mistreated people. The history of our country is just awash and ugly, but yet everybody wants to come here.
Yeah.
That's just...
they are. I'm not sure if I mentioned this, but there is a deal in the works, I believe, between Guatemala and Mexico, where they're going to do what I proposed they should have done a long time ago, which is to create a free zone, a tax-free zone, kind of like Hong Kong, along the southern border, between, like inside of Mexico.
Okay.
30 mile zone from all the way from Matamoros to Tijuana. And if they made that a tax-free zone and invited all the banks of the world to come and set up, and all these, a lot more industry. I mean, they got a lot already with these maquiladoras, but it could. And another thing they could do is, there's over 1 million Americans living in Mexico, and they could.
How many of what percentage of those do you think are retirees?
Most of them.
Most of them. Okay.
Yeah.
So those aren't folks that are typically creating jobs and that kind of thing.
Well, look, what I was getting at is that Panama has a deal. This tax-free. When you make a zone tax-free, I mean, this is what I remember seeing the ads back in the 90s. when Dubai was still a desert, and they had this all figured out, this tax-free zone, trade zone, and they were encouraging people to come in and set up operations in Dubai. And look at the place today; it's unbelievable.
Right.
And I mean, it's kind of like Las Vegas. People, they turned a desert into an oasis, and it's an unbelievable success story. And really, they could do the same in a border area. They might even be able to put gambling there and things like that, would attract a lot of people. But what it would do is it would kind of put a barrier, if you like, where people get to the border and they probably find a job right away, and that would stop them from going any further. And they're actually going to do that now in Guatemala. They're going to, on either side of the border, they're going to set up a tax-free zone and create a kind of a manufacturing zone along the border to stop people from coming into Mexico. So they've got the same problem on the southern end, and you've seen some of the clashes that they've had. They've been pretty brutal, and these are the people who are trying to make it to America, for heaven's sake. It's terrible. I mean, especially the huge number of Africans and Cubans who were protesting against the way they were treated and things like this. So it is a huge problem. And look, what's good about it? What's good about Trump, success so far in stemming the problem is that it's keeping the job market really tight. And if you listen to Steve Bannon, he's pretty up on this, and he's right. Even Trump's popularity is just about the highest level since he's been in power in office, and the employment situation is really something. And if you want to Google a kind of an independent view from a Canadian, Kevin O'Leary, has written a few things. And he's saying that the economy's there's never been an economy like this. He said it's just one of the most incredible economies ever. And he thinks there's a zero chance. He said that nobody with these kind of numbers has ever not been reelected. So, as long as Trump gets through whatever we have to get through in the next few months, I think, and it could backfire on the Democrats.
John, here's an update on that boating accident. I had asked you last week, and I hadn't heard.
Yeah,
the
wife has been charged. I think it's
careless operation of a vessel.
Yeah, and it's a little bit. Look, it's a lake. It's not the open seas, but I don't believe there's a law about failing to. The other boat didn't have its navigation lights on, so it was completely dark. They never saw it. And it was a moonless night, I think. So, it's just a very unfortunate thing that happened.
Wow. It says the charge seems, we're talking, a life was lost here. Was it one or two?
Two.
So this is a very serious thing. However, the charge is, what did I say it was? Careless operation of a vessel. That doesn't sound so bad, but apparently she could face up to 18 months in prison or $1 million fine. Hopefully.
I think they're just trying it on because he's rich. They know they're going to get the money. So,
and we're not siding with him or his wife because they're Mr. and Mrs. Wonderful. I mean, think about if it was you. I mean, you're out on the lake, enjoying life, minding your business, and the next thing you know, your whole life's just turned upside down.
Yeah.
Not because you were reckless or careless or.
Look, today you can be you can be the best driver in the world and you can still die in a road accident. Look, I keep telling you, this flying business, do you know there was another plane forced down yesterday or the day before?
No, John, I didn't catch that.
I think it was United or American, or Delta maybe. The engine.
Qatar Airways plane. No, that's an old one. That's an old one.
Yeah, this one. The engine
7 hours ago, but this is a Qantas also.
Yeah. This was one that I think it was the 737, and the engine half fell off. I mean, just terrible.
Let's see. When one of 6 tires burst.
No, this
is that
was
the one?
I think the 737 forced to land probably has the Delta. I think it was a Delta.
737 forced to land.
From engine issue. There it is. That's the one.
We're going to move on to the latest on the Boeing investigation.
Okay. So tell us what happened here.
The engine kind of the cover came off the engine, and it was kind of flapping. People taking pictures out the window could see that there was an issue. They called it an issue with the engine. I mean, I don't think the engine failed, but the half the cover came off. So. But
everybody's okay.
Yeah, no, they made it back all right.
Raw video, engine damage, forces United flight to return.
There it is.
Oh, there it is. It's flapping. Yeah, you're right. Well, imagine looking out the window. You're flying. You just put your seat back and you're ready to enjoy the in-flight movie. You look out the window as you're about to close it, and that's pretty scary.
Well, there's been some worse than that. That poor woman who got sucked out the plane, and
I remember that.
There was one in Manchester City, a while back. British Airways 737 again. That was quite a while ago.
We have one of our traders, John, is an airline mechanic. I wonder if he's in the audience today. If you're there, type something in the chat box. We'd love to get your take on this. If he's not here today, I'll ask him to come tomorrow and just. That's what he does. He works on planes for a living and trades. So.
Yeah. A plane that just is almost always awesome to just look at. Taking off or landing is the A380. I mean, it is such an incredible.
What's unique about that one?
Well, it's the biggest passenger plane in the world, but it is really well built. It's got a huge. The wings are really something on that plane. They're really very well connected to the aircraft, and see what I mean.
Here's a takeoff.
Yeah, you could probably get a better look at it when it's landing.
They had one for landing. Let me go to that one. A38 takeoff.
Oh, they actually you can see the profile there. Looks like it's got the profile when it takes off. See that? I mean, look at the wings on that thing. They're just amazing.
What is the wingspan? Is that a football field?
Gigantic, and they're big engines too. These are the most powerful engines pretty much on any plane. It's really it's kind of sad that they're not making any more of them. There it is. There you go. Look at that. It's kind of a monster.
Look at that. Yeah, that's huge.
Yeah.
Wow. How many people does it carry? Do you know?
500 or 600 can take. It's a big plane. I mean, look at the wings. You see what I mean? Mm-hmm. They're really something. But I mean, it kind of gives you confidence, because it's. I mean, really, that this plane touched. I hate to I don't want to jinx it, but it really has a good record. It's got an almost impeccable record.
Sometimes at night, I said, where we live out here by South Mountain, we're about a 20-minute drive from the Phoenix Airport.
Look at that picture. Mm-hmm. Isn't that beautiful?
Yeah, it is. Some nights I sit in my backyard about sunset right after, and some nights we're in the flight path, and it looks like other nights we're not. I guess they change it for whatever their reasons are, but some nights the sky will just be filled with planes. I can count, 5, 10, 15. But it's just when you sit there and think about the technology and the science and all of that goes behind seeing that plane take off and land, and then of course my mind's got to go another step. I start thinking about the people inside, whether there's 100 or 2, whatever there is. Each one, has their own life, their own hopes and dreams and worries, and I don't know. I'm a bit of a simpleton. I mean, sunrises still get my attention. the world in which we live, I never cease to be amazed at God's handiwork and what He's done by His own hand and what He's done through the hand of man, which is what we're looking at right here. So, anyway, where you want to go? Did I lose you, John? All right, we lost John. Okay, all right, let's go back to where we were. We'll pick back up with the... You there, John? Yeah, we definitely dropped him. Okay. So we're going to go back to where we left off with the logic. Then we'll jump to the concierge. Here we go. Here we go. Okay. All right. So we've already covered down through Crude. We were just finishing up with copper. Oh, we were starting on the S&P. Important prices, important areas, almost always tested. Now notice it says 73 to 75, which I just showed you on the chart. We did a couple times. $73 gonna be right. Okay, 73. All right, there's 73. So we go through 73, and we're up to 78 and a quarter. The initial target, okay, the initial target, 75, trail if possible. And what that means is, unless the chart is telling you you should exit the trade, you get to make a decision whether you're going to exit anyway, or if you're going to stay with it. Weekly trading zone above is 79/80. I just got a message from Valerie that she cannot hear me or John. Well, that's a problem. Okay, let's see what we can do to fix this. Okay. Kevin says he can hear me. Do you still hear me now, Kevin? Okay. So, all right, well, let me call John and see what happened on his end. Now, Valerie, well, okay, you can hear me, but it could be my inbound audio. Oh, I can't hear you guys. You guys can hear. All right. Well, let's see what the problem could be here. Let me open up my audio panel. You know what? I think did I just spot it? How about now? Somebody say something. Okay, Bill's. Oh, I just heard somebody.
You hear Valerie? Okay.
Yeah. Okay. Yeah. What happened? I don't know how this happened, but it jumped off of my Shure Digital headset onto some kind of voice meter. Never mind. Anyway, I got sound back. So is John still here? Because it was my headset that went out, not him. Let me dial him back real quick. Yeah, that was on my end, folks. Hey, John, my headset went out. Yeah, my headset went out. I couldn't hear you, but I've got it fixed now.
Okay.
Yeah, so just come right on back.
I'll come back right on. Yeah.
Okay. All right. Sorry about that. I don't know what happened. I got a pop-up on my screen that says you just plugged in some new audio equipment, and I just said ignore, and I don't know what happened. Anyway, all right. So I'm not sure where we left off, but
Yeah, I was about to say, if you could put the S&P on a daily, you can see that we're potentially, look, we haven't broken out yet, but we are potentially poised for an upside breakout here.
let me get rid of these
And
fibs.
you can
for a
see,
minute.
if you remember, look, sometimes this happens, you get another test. I mean, obviously the chart is starting to shape up pretty well with a good test, and maybe the Chinese are going to come back in a good mood after this holiday of theirs, of the 70th anniversary.
What is their
and
holiday
maybe-
now? What is it?
It's the 70th anniversary of their founding of the communist China, I believe.
Okay.
And actually, this is a great chart because look at your your resistance support, if you like. I mean, this is perfect here because there really could be a big run to the upside from here now. And this has basically been our theme all along, although we turned a little bit negative last week. But another thing that's kind of confirming that the likely upside is ahead of us is that the grains are going very well today. And if you remember, I said to put a buy stop on the beans at around 890. We're already at about 990 something, 905 or 6. The soy meal is very strong, and look, everything's strong today. The wheat, the corn, and I listened to that show on the weekend, the agricultural show, and they were basically saying that they thought that because of the weather and the fear of a frost coming in with this snow and everything is definitely helping the beans. So I think, and we've looked at the beans and we've looked at the soy meal. It really looks like these are poised for a big upside breakout now, and I think this is a move that has some potential that's unfolding today. So we did, and if you remember, I said that the corn probably, we had that bad down in August the 12th, I think, on that report, but it never really went any lower, and now it's starting to take back. So I think overall it's very positive.
I just had a message this morning, John, from our farmer, our trader who's a farmer. Let me see exactly what he said. I saw it pop up earlier. Ryan, here we go. Ryan says, and this is a guy who farms for a living, guys. He trades and farms. Corn getting close to filling the gap left the second week of August. All the reports from the field are lower yields. Corn and beans may continue to rally. Okay.
Yeah, it looks like that's something they mentioned on that show, that we've had the record yields in 17, 18, and then maybe 19, but it looks like the outlook going forward, because of floods earlier on and because of all the other stuff, that we finally turned the corner. And I tell you, this a lift off in the fall is a really bullish thing for the grains. So since we're kind of in the fall now,
390 to 410 to 450. I like that very much.
Yeah, and look, sort of divergent bottom here. The beans have got look, if they take back, you look at the corn there. If we suddenly get up to 410, you're really looking like a major bottom might be in place. The wheat looks good. We've had some divergence here with these different, the corn and the wheat made lower lows, but lately the beans have held up very well. There's a kind of a source of bottom developing on the meal, so it really looks pretty positive for the grains for the first time in a while. I would say that this is a move that really has some upside.
I just want to bring up the contract specs real quick on corn.
And that could be a thing that would lift the metals too.
Okay, now how do those two? You've mentioned that before. How do those two tie together?
Which ones?
Grains.
Oh, you mean the grains and the metals?
And the metals, yeah.
Well, I think this could be the beginning of some inflation coming into the markets. And remember, there's the Japanese are probably going to be buying a lot of grains soon. The Chinese may be in the same position, because while they haven't been buying because of the swine flu, maybe haven't heard much about that lately. Maybe it's getting under control, and therefore they're going to need to feed more pigs, I guess. So the overall
here's the specs: 5,000 bushels in a contract. It's clocked at 1/4 cent.
Yeah, so we had 1,000, about a $1,200 move on the beans so far today.
Per contract. Okay.
Yeah.
All right. So now let's look at the beans too while we're looking. So we saw soybeans. So I mean, yeah, we looked at corn, so here comes soybeans. Soybeans.
Remember we were talking about that breakout? You see how that, look at what's happened since that breakout. I mean, that's really something.
So since here?
Well, yeah, we talked about this first breakout and how it could really turn into something. It looks like it's going to go right up through the previous resistance.
What was the other thing you just mentioned? Was the soy meal?
Soy meal, yeah.
Soy meal. Soybean meal futures. Okay, we'll take that.
See what I mean about this kind of bottom here?
Wow,
I mean,
there's an interesting
we're clearing right above
there.
it. Yeah, so this is quite constructive, especially if we get up to around 315 beyond that.
And then we'll have another agricultural report on the 12th. I think they tend
Yeah,
to come out.
remember that this could be one of those times when the grains just decide to gap and go, and they're hard to catch. So I think it's that's why I put those buy stops in. I think we said to buy the soy meal above on a breakout above 300 too. So
good call. We're going to probably be a little more conservative. I foresee there being some potential swing trades across corn, across soybeans, across soybean meal. What else? Anything happening with wheat?
Wheat is also looking good.
Okay, here's wheat.
See, you got the divergence there. You made the all-time lows or the most recent decade lows, I guess.
Sure, back here.
Here, yeah, and now we had a retest, and now we're starting to break out. I think if you put the corn up, it's something similar.
Yeah.
It didn't make a lower low, it's still...
That's right, it didn't.
Yeah. And remember, we pointed out the last time back
and
in May
we're above this resistance.
That was a superb bottom. I mean, look at where we went from. I mean, we went up a pretty big move, on that bottom. If you remember, I congratulated.
We ran from 340 to 460, all the way back to 350. We didn't put in a lower low, as you said, and now we're starting that climb again. Now,
and this is sort of at the same price that Mike B was talking about a while back. Was a pretty good buy for this, so kudos to him. And look at the rocket ride you had from that. So, when one of the things to keep in mind is when you, in the same way as what has happened with the platinum until today.
Yeah, I just saw something about platinum today in the headlines.
But remember, we've had several stabs at going higher with the platinum that have been pretty good rallies, very tradable rallies. This is a bit of a bleak picture today, but remember.
Oh, but look, it's right into support. I can see this turning around right here.
Dwayne, I think we're in a three-wave pullback in all the metals, and it's a classic C wave, and I think we've got to look at the next few days as a potential turnaround here, and then remember, if we start a new leg up here, the upside on the next leg could be really something. So the gold could still come back to that 1450. Remember we said 1450 it was a likely area to come back to.
Yeah, you sure did.
If we come back to that and then reverse up, then I think the next up wave could be a ripper. It could be a really, really something big. And the same with the silver. Remember the silver just had a tremendous rally up to 1950.
I saw some guy in the middle of the night on CNBC talking about shorting silver. He gave all his reasons. I didn't agree with any of them, but he made a case.
He was right today. The commercials are manipulating this stuff down to their.
Here's silver.
But look at the three-wave pullback. So I think, maybe 16.5 would be the support there. So around 16.5 would be potentially a great place to get long if we see signs of return. So that, and then there could be a really big move to over the next 6 months, I think. Incidentally, there's some problems. These repos the Fed has been doing, up to the tune of about 300 billion so far.
Oh, that reminds me. I got a big question for you here, but go ahead and finish your thought.
The word is some of the Deutsche Bank America could be in trouble. That's one of the reasons why they're doing this repos, because they need the liquidity. And it's sort of, and apparently, they mentioned Goldman Sachs as well. No, this is just rumors, but there could be something to it. And obviously, if something does, and remember, there's about 20 Chinese banks that are in trouble, and then you've got Deutsche Bank Europe as well, and Commerce Bank are in dire straits. So,
does it seem to you like Goldman Sachs trying to keep sort of a low profile of late?
They've been very quiet. They've been very quiet, not the usual bravado, and that may mean that things are not going so great. The stock has not performed as well as most of the other banks, so it could mean that there's some trouble out there. But obviously, anything like that could turn the gold on a dime, and it was hard to get long on the way up if you miss the initial. These one especially the last, for the silver, for example, if you missed getting long on the 17, missed that move up to 1900, well, you've got a chance now to get properly set up for the next move if we're right and this thing does advance or continue its up wave.
Now, the question that I had for you, John, it came from, let's see, Bill, I think. Bill B. Let me find it. Here we go. And I'm sure you can speak to this. I've heard about it, but I haven't ever really researched it. He originally posed
the Rosh Hashanah thing, yeah.
Yeah. So I said, tell me about it.
Listen, some years it's buy Rosh Hashanah, sell Yom Kippur, and I think that could be the case this time. And at least that appears to be what's happening. And then other times it's the other way around. It's sort of whichever way the market's kind of going. So
now, what's the reason? What's the reason behind that?
There's no hard and fast rule. Hang on a second.
Yeah, go ahead. So the Jewish holidays are here, bringing with them a well-known investment truism that suggests investors may want to reduce their stock holdings in the short term. Making investment decisions based around religious holidays may seem like an arbitrary or foolish endeavor, but such a strategy, known unofficially as the sell Rosh Hashanah buy Yom Kippur play, does have a modest historical track record indicating some success. According to the Stock Traders Almanac, which analyzed data going back to 1971, the Dow falls an average of 0.6% between Rosh Hashanah, the Jewish New Year, and Yom Kippur, the Jewish Day of Atonement. This year, Rosh Hashanah began the evening of September 9th and ends the evening of September 11th. Yom Kippur begins the evening of September 18th, a Tuesday, and ends the following evening. The data is skewed by the period in 2008 during the worst of the financial crisis, when the Dow plummeted nearly 21% between the two holidays. On a median basis, the decline between the holidays is 0.5% rather than the 0.6% average. Historically speaking, the odds of the trade working are better than 50-50, but only just barely. Over the past 46 years, the Dow fell in 26 of the years and rose in the rest. So, it's interesting. I used to have a guest on the show way back, 2006, 2007-ish. Now, God, I feel bad, I can't remember his name. He's a real nice fellow. All of his trade, he came on Fridays. He was our Friday afternoon guest for a while. He was a money manager and traded folks' money for him. He did everything, and I mean everything, based off of seasonals. Something like this, what we just looked at with the Rosh Hashanah. And they're all, if you get this Trader's Almanac, there's all kinds of interesting concepts and ideas where at a certain time of year you sell this contract, and he did a lot of spreads where he would be long in one contract and perhaps short in another. Yeah, y'all know that's way above my pay grade. I just trade whatever's in front of me. I like to keep it simple. simple by design, as we call it. Now, I'm sure I still got enough wattage to trade some of those types of things, but there's not enough hours in the day. I mean, if I wanted to chase that, if I wanted to pursue that, if I wanted to do that, I could, but I don't know that it would benefit us. I really don't. You know, I think all traders have that part of their brain that's reserved for, you know, things, magical. Are you back, John?
Yeah.
Yeah. If you could give me, I need about 2 minutes. Can you just take the mic and run with it for 2 minutes? I'll be right back.
Sure.
Yeah. Just keep going. Whatever you were saying.
Yeah. The TVIX, after looking like it could go somewhere last week, has come back again. Oh, one thing that is actually potentially opportunistic here, the LABU is just starting to get some traction after being hit down again to a pretty low level. So I keep a real eye on that one. You know, we got ICPT and MDGL are rallying today. You know, I don't know whether the LABU is suffering from the uncertainty over the healthcare situation, the lower drug prices and all that, but actually it's making a pretty good reversal today. Actually, and this could be a great buy right here. It's sort of looks a little bit like corn did at that low we just were looking at about 15, 20 minutes ago. And you saw what happened after that. So if the healthcare was to kick in, that would be a big lift to the market, because the healthcare has been a big drag on this market for a couple of years now, in spite of the fact that the market has gone to new highs. Can you imagine where the market would have gone if the healthcare had been, you know, on a roll? That may be about to start, and that could really, you know, if the healthcare was to chime in, that could really help the market go to new highs, and substantial new highs for that matter. The other thing that's looking quite, you know, not constructive, I say, it's getting a little bit better. Semiconductors pull back a little bit. There's a sort of a triple top up around 200 on the SOXL, and again, a strong upside breakout on the semiconductors would be very helpful to the market. Apple is getting very close to making a new all-time high. It seems like they really nailed it with this new iPhone 11 series. Everybody's talking about it, and the fact that apparently I'm seeing some tweets, actually some Twitter things of outstanding pictures that this triple camera takes, and some of the other features in the iPhone. So it looks like that's going to be quite a status symbol.
Okay, I'm back. What's the status symbol?
The Apple. I was talking about the iPhone. It's getting very, very good reviews. The latest.
We're talking the 11 Pro.
Yeah, the 11, and it's pretty unusual for Apple to respond so positively to a new release. Often it's kind of an anticipation, and they sell the release. But this time, it's clearly getting very good reviews, and I think a lot of people are going to go for an upgrade to that phone.
What's the difference between the 11 and the 11 Pro? Do you know?
The triple. I think the triple is the.
Cameras. The cameras. Right?
Yeah. And it's kind of, you know, it's kind of clever because it makes it stand out. You know, it's sort of a standout thing with the three eyes, and it's obviously a hit. Generally, it's getting very good reviews. And I noticed there was a pretty strong supporting campaign. It's sort of popping up all over the place. Yeah. Oh, I think there's a Pro Plus, and I think that's a larger case, a larger screen size.
Yeah, let's check on that. Oh, this is at Walmart's. What's Walmart selling this baby for? Let's just go. You say 11 Pro Plus?
I think so. Yeah. There you go.
There it is.
That's a
There's
larger.
a Pro Max. Is that?
Or maybe it's one of those. The ones that has the larger screen and the larger display.
Okay. Content blocked. Interesting. All right, so you can get. Oh, look at these colors. They've never offered a colored. Has there ever? Oh, there was a red one time, wasn't there? Like the 8. Didn't it come in red? It says this one you can get it in green, or what color is this? Gold. Okay. So there it is in gold. 6.5-inch Super Retina XDR display. Water and dust resistant. I wonder if you could drop it in the toilet and it keeps on ticking.
You know, the stories they're hearing, you know, that somebody found a phone that was underwater for like 10 years or something. It still works. It's amazing the way that these are pretty
Have you ever gotten
resilient.
one wet?
I think it has happened, yeah.
Yeah, my wife and I both have done that. And what worked for us, you take the phone and you put it inside of like a woman's nylon stocking, and you wrap it in that. Then you put it in a container filled with rice.
I was just
bury it. Yeah.
I was about to say rice, but
Yeah,
you
it just sucks the moisture right out of it. And gosh, we fixed a couple phones that way. I think we fixed a little mini tablet the same way. So those of you that ever are faced with that, give it a try. You know, it does work. It can work. So
yeah.
So now,
can you imagine how many of these things they make? I think probably make about 50,000 of those things every day. Can you just imagine the logistics of that? It's just staggering.
I can't.
Another miracle of life today.
Yeah, no, it really. I mean, my son hit me with
the
this.
fact that they're made with such precision and uniformity that it's just, you know, I mean, there's probably very low failure rate, if any. You know, it's just staggering.
There's a saying, I forget exactly how it goes, but something to the effect that there's more computing power in an iPhone, the early iPhones, than there was on the first spaceship that went to the moon.
Yeah.
I don't know. You know, I'm sure they're tweaking that a little bit, but there has to be. I'm guessing there's some truth in it.
Yeah. I know for sure, and I think the next generation of computing power that's probably right around the corner.
Oh, that brings me, John, to a news article I wanted to share once you got on the air with me here. I got it right here. Is this one it? No. Oh, there's another one I want to go over with you too. This one right here. Just like that, the promise of quantum computers overtaking traditional computers is one step closer to reality. According to a recent report by the Financial Times, tech giant Google claims to have achieved quantum supremacy, meaning it has built a quantum computer able to solve formerly impossible mathematical calculations. If proven true, this marks a major milestone in the development of quantum computers and possibly the demise of blockchain technology as we know it today. Since the advent of Bitcoin, the threat of quantum computing has motivated researchers, technologists, and now governments to build software able to resist attack by even the most powerful quantum computers. Quantum computers, while still largely theoretical, are thought to vastly speed up the process of solving complex computations, so much so that current calculations impossible for a current computer to solve in one human lifespan would take mere seconds for a quantum computer to crack. These states of matter, when harnessed for computing processes, can speed up our ability to perform immense computations. As explained by data research firm CB Insights, quantum computers rely on naturally occurring quantum mechanical phenomena known as the superposition and entanglement. And this summer, National Research Council of Canada partnered with the University of Waterloo to launch a 2-year research into quantum-safe blockchain technology. They got a $180,000 grant to do this. Other governments are trying to play catch up. The U.S. is lagging behind quite a bit. The U.K. is putting a lot of money into quantum computing hardware, and now they're just about to start thinking about post-quantum software and cryptography. President Trump signed the National Quantum Initiative Act into law last December, allocating $1.2 billion over a 5-year period to activities promoting quantum information science. In June, the UK's National Quantum Technologies Program received an additional $193 million from the UK government. And so why the fuss? Efforts in the private sphere are similarly increasing, according to CB Insights, which found the number of investments in private quantum computing startups has increased over 200% in the past 6 years. All this in the mind of Adam Colton of Quantum Research Ledger Foundation speaks to a growing problem. A decade ago, people said it would take 50 years. So 10 years ago, people said it would take 50 years to get where we are now with quantum computing. 5 years ago, they said it would take 25 years to get where we are now. So quantum computing has this nasty habit of exceeding people's expectations. The blockchain industry does need to grapple with this and be wary. Colton's group claims to have built the first blockchain that is secure against attacks from quantum computers. Without proactive behavior to safeguard existing technologies from attacks, Colton fears the future blockchain and cryptocurrencies and also the internet at large will be at risk. This kind of changes everything. This is by far the most pertinent security issue for blockchains when it comes to coexisting in a world with quantum computers, given that researchers and mathematicians are already aware of a possible algorithm called Shor's algorithm that could be used by a sufficiently powerful quantum computer to break elliptic curve digital signatures. So we're fighting an enemy that doesn't yet exist. Now, the other interesting little bit of news, an investor has launched a class action lawsuit against Overstock and 2 former executives claiming securities violations through making false statements to manipulate the firm's stock price. According to a complaint filed a couple days ago, he alleges on behalf of himself and other investors in the firm Overstock, between May 9th and September 23rd, the defendants published materially false and misleading statements regarding the company's financial state. He states that the defendants' alleged false claims allowed them to artificially inflate the value of Overstock and allowed former CEO Patrick Byrne to sell all of his shares, worth over $100 million at the time, at unrealistic prices. Further, according to the document, the claims allowed Overstock to sell off more stock to the market to fund its cryptocurrency projects and caused Ha and other investors to buy stock at artificially inflated prices. That something like this is very difficult to prove. Patrick Byrne, been a friend of the station and mine since 2006. He's a very smart guy, but I also think he's an honest guy. So he may have gotten himself into some kind of a situation here, but I don't believe Patrick would set out to defraud investors because he has always, well, I mean, look at the way he took his company public. Dutch auction versus letting all the, investment bankers wet their beak first. He wanted to give the public an opportunity, and he's been punished for that ever since. I think this is a continuation of the same punishment. That's just my thought.
Probably, yeah.
As a result, on September 18th, Overstock moved to restructure the dividend to end the lockup and allow the shares to be freely traded at issuance. So we'll see what happens. Take a look at their stock. Haven't looked at it in a while.
Stock's been doing okay.
Is it OSTK?
Yeah.
Yeah, Overstock. Now, when this thing first went public, and I was talking about this last week on the show, when Mark Falk and I used to do the radio show every Friday about naked shorting and the problems that existed in the marketplace. During a 2-hour show that Mark and I would do, we would see the entire float of Overstock turn over. The SEC never lifted a finger to do anything. They were duplicitous in the crime. Phantom shares. They were selling shares that didn't even exist. You know, there's a 3-day rule. If you short a stock, now this isn't futures, but in equities, if you short a stock that you don't own, your broker has to make arrangements to borrow the shares from someone who does own the stock as collateral against your short position. And so there's a 3-day rule. The broker has 3 days to cover the naked short position, but none of them ever did. And the SEC never enforced the rule. That's how companies like Eagle Tech and Rod Young, which was a 60-minute segment that never aired, they pulled it at the last minute. Eagle Tech was shorted into oblivion by naked short selling, and nobody did a thing about it. It's a real problem, folks. It hasn't gone away, but I invested years of my life, along with my cohorts, trying to bring this to the public's attention and trying to get the SEC to act. And I'm not one to give up, you know, I'm kind of a bulldog on that kind of things. Once I sink my teeth in, I don't let go. But it was killing me. And so I had to leave equities and move to futures. I couldn't protect everybody, so I had to protect myself. And that's why I've been preaching futures ever since, because it's purely electronic, FIFO, first in, first out. If you're trying to buy one S&P contract and there's a guy in line behind you from Goldman Sachs wanting to buy 1,000, you get served first. Pure electronic, no middleman, no monkeying with the tape. So anyway, it's still going on. Go ahead, John.
Yeah, I agree. So anyway, looks like the gold and silver are putting in a little bit of a small turnaround effort. I was just saying while you were away there that keep an eye on the LABU. Looks like it's starting to turn up quite
Let me jump
strongly
over there. You need to get that?
So listen, I better listen.
All right,
have a great afternoon, and we'll catch you tomorrow. Thanks.
All right, bye. LABU. Okay. All right, let's jump back to where we left off. See, we've covered. We're almost done with logic. Then we'll jump over to the concierge. Let me get. There we go. All right, so we covered the crude, covered the copper, the long on the S&P. That's what we were talking about. So go back there. All right, so there was a Logic 247 alert to consider being long the S&P after we did the gap fill trade, okay, which happened twice. Important prices, important areas, almost always tested. So between this short, we had this long and this long and this long. Now this one ran up to 78 and a quarter. The entry was 73. Initial target 75. Zone overhead 79.80. So what this means, consider being long the S&P 29.73 with an initial target at 29.75 and tip trail if possible. So when you look at your chart, if there's nothing threatening, nothing imposing, you're in a perfectly good trade. It's profitable. You can exit if you want, but if the chart's not telling you to exit, perhaps you should consider staying with it until it reaches an area that we expect to be, in this case, good resistance, because we're approaching it from below. So from 73 to 75, that's 2 points. From 73 to 79, that's 6 points. Okay. So if we go back here, there's 73. We missed 79 by 3 ticks. Back below the trigger. Off we go again. Make it up to 77 and a quarter, so that's 4 and a quarter points. So from 73 to 78, so that's 5 and a quarter points the market made available. And then 4 and a quarter points market made available. Back below the trigger. This time we hit 78.75. So it looked like we touched it, but according to this, we missed it still by 1 tick. Then we get back below the trigger. We trigger again on the short side, just that gap fill trade all over again. Okay. And then we trigger on the long side. And from 73, we go up to 77.5, another 4.5 points. Back below the trigger one last time. And from 73, we hit 79. We consolidate for 6 5-minute candles, 1 30-minute candle inside of the zone. And we pop right up to an area that we expect to be good resistance until it isn't. And we've been battling with that area now for a couple hours, hour and a half. If we can get above this, above these swing highs, we have a wee window of opportunity right there. Okay, is that wee window enough room to run, as we say, to make it worth the risk? Well, if you catch an entry at 29.88, there's 29.91. How about if you went 89 to 91? Is that doable? It is. Okay, but you never know when sellers might come in early. What about from here to there? Well, here being 29.85 half to 29.87, that's only a point and a half room to run. And when you're cutting it that close, you always got to remember, because we're talking long, these sellers who shorted this. Now, people who took a short position here last week, look at the ride they had. Pretty spectacular, right? Short sellers rode this thing from 29.93 down to almost 29.43, almost 50 points. Okay, that's a nice move. Leg, retrace, leg, retrace. And then when we gapped higher last open, that turned, gapped higher last night at the open, that turned the whole thing around. So where we were drawing legs to the downside, leg, retrace, leg, retrace, leg, retracement, deeper retracement, reversal. Now we're building legs to the upside. Leg, retrace, leg, retrace, leg, deeper retracement, leg. Market is back into a consolidation phase, making up its mind, inventorying all the buyers and sellers that currently make up the order flow. We're still weighted a little heavy to the sell side, but again, these numbers change so quickly during the day session. I don't think that's I don't think you should base your buying and selling decisions on this. It's information to know, but your decision shouldn't hinge on that just because it can change so rapidly. So, market now saying, okay, do I have enough buyers in the order flow to get us up to this next level? Because if not, it'll only tread sideways so long, and then it's going to drop and look for support. Okay, where could it, where would it, where might it find support? I'll show you. We could come back to this zone from last week. So you got a swing high here, got a swing high here. If we go sideways, these are 30-minute candles, we go sideways for another candle or two. This BBC, bull bear indicator, below we're bearish, above we're bullish, that's going to drift up. These two could come together and meet right around there. All right, Tim just sent me a message that I screwed up the weekly trading zones. So let me look, see what I did.
I've got it.
Did I mess it up? Huh? Val? Oh, Valerie. Okay. No, she says she got it, so I'm leaving it at that. Okay, so Price rolled sideways. This drifts up. They meet somewhere in this area. And then if the BBC and this old WTZ do serve as good support, remember, resistance, resistance, now we have an opportunity for it to prove itself as support. If we get support on this pullback, that should give the market leg, retrace, enough oomph to get us up into this area, which is yet another obstacle that the market has to overcome on its journey to get to the zone overhead. Currently, although I'm not ready to put out an alert at this second, we can still say that the market is trying to get to the zone overhead. We won't say it's an easy path, evidenced by the graphical representation right here of investor sentiment, but the sheer fact that we're above the BBC and above this old zone tells us the market is, it hasn't made a decision, okay? It hasn't made the move, maybe a better way to say it, but the high probability now, because of what I just said, is a move to the upside. But prior to that move to the upside, there may be a pullback in the cards to here, and then off we go. All right, so we covered that, and then the same thing on the Dow. Okay, we had the gap fill, and then logic 247 said to consider being long 26,880. Here's 26,880. Okay. 26,880, we put in a high at 918. So that's 38. Alexa, 38 times 5.
38 times 5 is 190.
Thank you. Okay, so that's $190 per contract move. Price gets back below the trigger. Important prices, important areas, almost always tested. So we get another basically $190 move back below the trigger. And now we're seeing the final part of this alert fall into place. 880 to 900. We've done that a few times. How many? Let's put a line there. 880 to 900. That's 20 points at $5 a point. That's $100 per contract traded. So for someone that's, their goal is simply to get their points for the day because you're still in the learning phase. There's your goal once. There's your goal twice. There's your goal 3 times. There's your goal 4 times. There's your goal 5 times. And your goal 6 times. So if you're looking to take 2 points a day out of the market, there's 6 opportunities to get her done. Now, the second part of the alert, weekly trading zone above, 980/985, and the swing high so far, 968. So we still need about another 12 points above that swing high, okay? Would put us back into the zone where we found good resistance here, here, and potentially here when we get there, because we know that's what the market is trying to do right now. It's trying to get to the zone overhead because price is always trying to get to a weekly trading zone. From the moment the market opens on Sunday night till it closes Friday afternoon, price is trying to get to a zone. Again, the first part of the trade, 20 points, $5 a point, $100 per contract traded. There's once, twice, 3 times, 4 times, 5 times, 6 times. Okay. Now I also said initial target, trade to target, but be careful, there may be an obstacle at 26,920. And there's 26,920 right there. Now, why did I say that was potentially an area for, or did I call it an obstacle? Why do I see that as potential resistance? I mean, if you look left, there's no previous swing high at that price. But here's what there is. The price at which we made the last bearish cross over here. Can't say it enough. That's an important area, and when price approaches it, you should anticipate it to be good resistance until it isn't. So it was good resistance here and here. This time we made it through. This pullback here, you can see, now again, if we go sideways, the BBC is going to rise to meet it. What's the chance, what's the probability that they meet up right about there? Well, I'd say it's a pretty good probability. If it's not a forecast that will happen, but if in fact we waddle sideways, maybe drop a bit like we're doing right there, and this is coming up, they meet here. That's what I'll be waiting for. I'll be waiting for the pullback either way, okay? If price connects with the BBC in this area, okay, whether it's in wherever price connects with the BBC, I'll be looking for a continuation of the move up to that final target at 980/985. If you watch me walk through this enough times, day after day, or if you want to speed up the learning curve, you can go to youtube.com/CFRN. I do the same thing every day on the show. At some point, instead of it being just squiggly lines and brightly colored candles, you'll start to see the logic. Round peg and round hole kind of thing. I can't say when it'll happen. It happens at different times, different amounts of time for different people, but there's gonna be a day, if you hang in there, if you don't blow up your account in the meantime, which will just send you packing, or it'll send you back to reload your account. If you'll be patient and trade in sim until you are consistently profitable, minimum 10 days in a row where you meet your goal in 10 trades or less, and or the clouds part and you start to see the logic, right? We know price is trying to get to that zone overhead. So why am I even entertaining the thought of a pullback? Because that's how markets work. Leg, retrace. Leg, retrace. We could scroll back to the inception of the markets and you'd see the same thing. Lag, retrace. Price is channeling back and forth between buyers and sellers, whether the market is climbing or falling. Auto sum, bid ask, apply. Okay. See, now we got the numbers down here. Okay. Price is channeling whether the market's rising or falling. Price is always channeling back and forth between buyers and sellers, buyers and sellers. And we see a graphical representation of that on our chart. Okay. So why don't I envision just a run to the zone. Why do I feel like there has to be a pullback? Well, what I just said. You see, since we launched this move, now these are 30-minute candles, so you got to think for a minute, but we had a leg, and then we had a retracement. If I drop this to a 5-minute, you'd see that retracement very clearly, but it's a red candle. We were way up here. This candle closed here, this candle opened here, it ran up to here, then it came back to where it opened, and then it went lower than it opened. That's a retracement. Leg, retracement. We've gone, since that retracement, this candle opened at 860. We've gone 100 points without a pullback. If the average swing in the S&P is 3 to 5 points, what does that translate into for the Dow? I'm not going to give you the answer because I want you to figure it out, because if you do the math, if you study the charts, if you figure it out for yourself, you'll own that. You'll say it with the confidence of someone who discovered something, not the confidence of someone who heard something from some joker on the radio or at some seminar in Vegas, or whatever the case might be. You read it in a comic book. I'm not saying price. Buyers could show up because everything is dictated by the order flow. So if a group of buyers shows up committed to their long positions, they could run this thing up in a heartbeat. But the natural rhythm and flow of the market says we'll get a pullback. This is just an example of where the two could meet. And once price touches that BBC, confirms good support and starts to move higher, you won't find a higher probability trade that I'm aware of where these two intersect, a move back up to challenge this swing high and ultimately the zone overhead. It's just logical. When you put your key in the car and turn it, you know what you expect. If you've taken care of your car, when you turn the key in the ignition, the high probability thing is that the engine starts, right? And then all these little things go ding, 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 and tell you to put your seatbelt on. So that's all I'm doing here. We turned the key in the ignition last night at 6 p.m. Eastern. It's just the next thing in an orderly flow. But again, it's some kind of unexpected economic report, a tweet, a news article out of China could send this thing screaming lower or screaming higher. But under normal conditions, without any external fuel thrown on the fire, I just explained to you the next high probability move. We'll revisit this tomorrow, see how it panned out. Okay? All right, let's jump to the Russell real quick here. Globex opened last night. Was right here where you see the gap. Okay, we already talked about the gap fill. Did we do anything else with the Russell? No, we did not. It did not look, I did not see the high probability move develop. And look what happened. Remember, the S&P and the Dow, after the gap filled, we wanted to go long. But if we wanted to go long here, we'd have been running right into the BBC, which represents good resistance until it isn't. So that's why there's no alert there. Now I've moved my, there it is. There we go. Okay. So the next one's the NQ. And it's not a long, it's a short. 77.17 to 77.07. So let's go look at that. NQ. There's the gap fill. And NQ 77.17 to 77.07. Swing low was 77.07 half. Valerie, we might have missed that by 2 ticks. Does it say PT? If you check that for me. I just want to make sure we have it right. Okay, thank you. Then after that, I'll get back to you on that, guys, as soon as she checks it for me. Gold. Might have been off 2 ticks on that. We'll find out for you. Gold. Oh, gold. Now, look at where last night. Last night. All right, here's the Globex open. Look where price fell to and found good support for a couple hours, 2.5 hours. At last week's zone. That's why I say on Thursdays, if you jot down these zones, they can really help you. Even if you're not a partner or passport holder yet, they can provide you with, a couple days worth of framework. So then the sellers came in, they took it down. Where'd they take it to? The next weekly trading zone below, 72.73, where we have been consolidating now for 1, 2, 3 hours. Okay. The alert was 1500. To 1499. $1,500. With the understanding that we only have 3 points room to run before we hit a zone, which will be good support until it isn't, and it was. From 1500 to 1497, that's a $300 per contract move. Didn't quite get there on this move. Missed it by a few ticks. Trigger. Back above the trigger. Important prices, important areas. Almost always tested. This time we make it all the way down to the target. And then we get back above the trigger again. And we make it to the target and then some. Okay? That's where the trail if possible part comes in. Okay? 1500 to 1499. Trail if possible. Zone below is 96.97. Okay? So we hit 96.97. We catch the bounce. We trigger again. Remember, we had 3 triggers here. Once price trades through that trade to target, and we take out these lows right here, as soon as we get into this territory, it's obvious that price is trying to get to the zone below. I hope it's obvious. This will help. Price is below the BBC. So since here, price was trying to get to this zone, and then once price gets below that zone and takes out this swing low, well, now it's trying to get to the next zone below, and it did. From 96 to 73, that's a 2,000 from zone to zone here. It's a $2,300 per contract move. If you've earned the right to trade 10 contracts, it's a $23,000 move. But don't ever try to trade more contracts than you're qualified to trade, or that you've earned the right to trade. This is how we teach it. You're in sim till you qualify to go live. Well, I want to go live right away. I need to make some money today. Well, if you need to make money today, imagine what it's going to be like tomorrow after you've lost a bunch of money. So be calm. We want to see you put together minimum 10 consecutive days in a row in sim where, using our methodology, our strategy, our indicators, you put together 10 days in a row where you reach your goal in 10 trades or less. Then you get the green light from our blueprint to go live with just one. We then want to see you increase your account balance by $2,000 before you add your second contract. What this does is it puts you in a situation where every additional contract that you add, when the blueprint says it's time to add it, is always underwritten by profit you earned in the market. It's a huge dynamic. Please don't miss the importance of that. Okay? All right, what do we got left? We did the S&P, we did the Dow, we did the Russell. Did we do the NQ yet? I guess we still got one more, NQ. All right, let's do that. Oh, wait. We had another crude. which was to be short 55.65 to 55.55, trail if possible. Weekly trading zone below 54.40/45. I was reminding our traders that, hey, last night, Sunday night, when I'm doing the zones for the new week, we're still working off the old zones. So let's take a look at this last one. Okay, now 55.65 to 55.55 to 54.40/45. All right. 55.65 55.65. Come on. All right, so we can obviously see we triggered here. Then we tried to get back above the trigger. We got to 62. We needed 3 more ticks to get back up to the trigger. 4 ticks would have put us above it, but that's okay. Just to pull back to the VVC. Nothing more, nothing less. From, now remember, these are logic. We still got to do the concierge. L2, 55.65. So 55.65 to 55.55, initial target to 54.45. Alexa, what's 55.65 minus 54.45?
5,565 minus 5,445 is 120.
Alexa, what's 120 times 10? I know that.
120 times 10 is 1,200.
Thank you.
Anytime. Have a good morning.
You as well. All right, so this is if you are a passport holder, if you have access to Logic 247, that's the only way you get access. If you acted on this alert, entered at the entry, exited at the trade to target, it's a $1,200 per contract move. Yeah, you know I'm going to say it. If you've earned the right to trade 10 contracts, earned the right. This is a $12,000 move. You know, there's people in this country that only make $24,000 a year, and they work hard. You know, the lower paying jobs typically tend to be some of the hardest work. It may not be mentally taxing, but boy, sure put a strain on your back and everything else. So for the one contract trader, if you could point your mouse here and then point it again here, $1,200 per contract. The trade never took any real heat. Now let me point out something here, because this is a difficult one. We all know we're supposed to use hard stops. And every technical analysis book that you ever read is going to tell you that once you're in a trade and it starts to move in your favor, as soon as possible, you need to get that stop to break even, and then you need to lock a little in. We teach the same thing in our live training room, but we're working on a short time frame there, a quick time frame. the range chart. The dynamic that's introduced with the 30-minute chart is completely different. And the alert prices that I give you are not derived through normal methods, okay? It's unique and proprietary to what we do here at CFRN. It's called the CFRN Emini method. I dare say you don't see the same behavior on other charts with other methods. So let's say we got in at the entry, we sold 55.65. We get a nice drop, but we know that, hey, but wait, perhaps there's more. But, you know, because the book said, it's because how we were trained in the live training room, I'm gonna protect myself. Yeah, I got a bunch of money on the table right here. But let me just be clever. Let me take my stop loss, which I've set here. I'm just drawing a line. Entry stop loss. A lot of money on the table. Yeah, I'm not going to let this dissipate. I'm not going to let this vanish. I'm going to get paid. So let me bring my stop loss. Oh, no, not just to break even. No, I'm going to lock a little bit in. Alexa, play Taps.
Taps with orchestration by U.S. Marine Band, starting now on Amazon Music.
Not to be overly melodramatic here, but I hope you get my point. This is not your father's trade setup. We talked about this last week, this negative reinforcement kind of thing that the market does. Here you did what you're supposed to do, what everybody's going to teach you you're supposed to do, and you got, oh, you see what happened? If you did not pay yourself on the way down, if you did not take some profit on the way down, you may have taken no profit. Alexa, stop. Okay. This is a great example, but it applies to every doggone trade, every alert of ours that you trade. So what's the solution? We go back to Mark Douglas and what he taught us in Trading in the Zone. You have to learn to pay yourself as the market makes money available. Now that's simpler to do when you're trading multiple contracts, but you can't trade multiple contracts until you earn the right. So be patient, pace yourself. This isn't a sprint, it's a marathon. You've got to build your account size, one contract at a time, till you've earned the right to trade multiple contracts. Even if you were trading just 3, you could have got off one here, maybe got off another here, and never touched your stop loss. Do you see how we've done the same thing by getting off some contracts here, taking some profit? We can leave our stop loss up here because our risk now is only on one contract. So we get paid again, and now you can get paid on that third contract, but hey, maybe not. Why? Well, look what happened. We got 5 more minutes in the life of this candle. If it continues down, what do we have on our hands? The slice. Only 3 things happen at a weekly trading zone. Consolidation, rejection, and the slice. But it said, yes, it did. But you get to make a decision. Get out here, go cash your check, life's good, or you can wait for the exit signal. Tomorrow, I'll go over the exit signal with you. Okay, all right, we're going to rip through these Concierge Trade Alerts real quick. Now, the ones I just went over in detail with you today, that's the Logic 247. That's the dynamic in the moment alert service where I give you the alerts. The second opportunity develops. Now we're going to go to the Concierge Trade Alerts, which is a static report issued once per session shortly after the Globex Open. The numbers are good for the entire session. They are based on prior price behavior, where the ones we just looked at, logic, are based on current price behavior. Okay. So let me pull them up. Last night I got them out at 6:20 p.m. Eastern. Okay. All right, let's go to the S&P chart. If you want to grab a screenshot, if you haven't already, go ahead. 5, 4, 3, 2, 1. All right. Concierge said consider being long 29.88 or above. That has not happened yet. Or consider being short 29.67, which is what you see right here. And that made 2.5 points available. Okay. From the Dow, Concierge said consider being long 26.960. We just touched that. Now we're in a retracement. The flip side said to consider being short 26.800. Never got there. Okay. Next is the Russell. Russell said consider being long 1535, haven't got there yet, or short 1528, which we did. And 1528 is going to be right across here. $15.28 down to $15.20, that's 8 points, $50 per point, $400 per contract traded. And we may be about to trigger on the long side. Gold, Concierge Trade Alert for gold was considered being short $14.99, which is, now here's that two fingers pointing at the same area. The logic said 1500, Concierge said 14.99. Two fingers pointing at the same area, and look what happened. You can hang that in the Louvre. It's a beautiful thing, a work of art. Okay? Just watching what the market does every day. Outside of my control. I have to focus on the things I can control. When I enter, how much I risk, when I exit. The minute I start trying to fool myself into thinking that I can exert any kind of control over what the market actually does, like, well, I know it can't go any higher. Want to bet? Well, it can't go any lower. Really? The market has the ability to stay liquid far longer than you and I ever will. Okay? All right. After gold, crude, Concierge Trade Alert for crude said to consider being short 55.80. All right, so 55.80 is right there. A little bit ahead of the logic alert, but does that qualify as the same area? To me, it does. Okay, so again, you got two fingers pointing at the same area, and look at the results. Will that always happen? No. Does it happen enough to be the high probability thing? It does. Okay. We've already talked about the dollar value involved here. So what's next? The NQ. NQ, consider being long 77.69, and we made it up to 81. So we're talking a little over $100 per contract. Okay. The short side for the NQ was actually 77.23. We got down to 07, so there's a couple $100 there. Okay. All right. So I usually spend most of the time on the Concierge. Today I spent most of the time on Logic. Hopefully you now, if you're new to the show, new to CFRN, you have a better understanding of what they are, how we look at them, how we evaluate them, how we use them. Okay? Now in the Concierge, you'll notice there's no price target. The trade to target is always the zone overhead or the zone below based upon market structure. After you spend a week with me, a couple days, and Michael teaches you how to use our indicator set, how to read them, you'll always know, is price currently trying to get to the zone overhead or the zone below? Once you know that, the potential for you to become a consistently profitable trader, it actually becomes a high probability. There's no guarantees. Not in trading, not in life. Death and taxes, I suppose they say. But beyond that. Now, understanding it's a business based on probabilities, do you want to wake up and trade tomorrow with the probabilities on your side or against you? They're either for you, you're either trading with the probabilities or against them. And until you become a partner or passport holder, you may not ever know which end is up. You might not understand, am I trying to swim upstream? Because if you are, guess what? If you just turn around and go with the flow, this agonizing, excruciating, head-banging thing we call trading can actually be enjoyable. You can turn that frown upside down. Put a little pep in your step. Because you're no longer trading in the dark. You're no longer blinded by all the pretty lights and shiny objects. You spend a week with me, you'll learn how markets work. You become a passport holder. I'm going to teach you not just how to trade these alerts. I'm gonna teach you to spot these alerts before I even post them. You're going to see it coming. When your phone or your computer goes dee-dee-dee, you're not looking for the alert anymore. You're just looking for me to confirm that you in fact did just see what you thought you saw, because you already got your order on before I even publish it. That's where I'm going to take you. All you need is a passport. All aboard. Let's do it. Okay? Let's go to our good word for the day. Last Friday, we talked about a formula for successful living. Today, we're going to talk about hang on. What did we talk about Friday? Was that today's notes? I don't think so. Let's try that again. Here we go. Yes, that is what we talked about. Today takes us to Job 14:7. There is hope for a tree. If it is cut down, it will sprout again, and its new shoots will not fail. It takes God's wisdom to find a mate who can fit where you are and go where you're going. If you choose using only your own wisdom, you might not make the best choice. And when a family shatters, the wounds can last a lifetime, even though the war is over. Now, if you try, yes, I'm going to create an analogy here. If you try to learn how to trade without any help, with no one to teach you, Remember, you need a teacher to do your own plumbing. You need a teacher to fly an airplane. You need a teacher to do brain surgery. You need a teacher to practice law. But with trading, you get to choose. Do you want a teacher or not? You want to wing it? You can. Okay. The financial damage that you do to yourself while you're winging it is not the biggest pitfall ahead of you. It's the psychological damage. You see, the financial damage can be corrected. God bless America. If you run out of money today, if you have your health, you can go out tomorrow and work and, get some more money. We can't create more time, but we can create more money. Okay? So again, as you're struggling to find your place in this world of trading, blown up accounts and whatnot, it happens. Financial damage, you'll get over it. But the psychological damage you do to yourself, that is going to take time to recover from. Those wounds run deep. Now, it's best not to create the wreckage in the beginning. I know for many in the audience, the wreckage is already there, so you've come to us for help to deal with that. That's why we're here. But if you're new to this business of trading, if you don't have the financial wreckage and the emotional baggage yet, boy, you're in the right place, because maybe, just maybe, you don't have to go there. It's up to you. All right, back to this. If you choose your own wisdom, you might not make the best choice. When a family shatters, the wounds can last a lifetime, even though the war is over. Please hear this. Now we're back to talking family here. Never use your children as ammunition to hurt one another. Ammunition doesn't just destroy the target, it also gets destroyed in the process. Your monologue of bitterness may be true, factual. He or she really did do that to you. But it can destroy your child's ability to build healthy relationships of their own. Remember, children are going to mimic what they see mom and dad do. If dad slaps mom around, little Johnny, it's a high probability he's going to slap his special lady around. Sorry to use such a graphic term to describe it, but let's cut to the chase here. It's true. If your dad beat your mom, there's a good chance you're beating your wife. I'm sorry. It's just how life works. Okay. If a child cannot trust a parent, who can they trust? Even if you can't save your relationship, save your children. Job says, there's hope for a tree. If it is cut down, it will sprout again, and its new shoots will not fail. How wonderful. New shoots born out of a dead tree. That's our message. There is life after death. He's the God of second chances and the God of new beginnings. Just because your dreams didn't come true doesn't mean your children's dreams can't come true. If the only thing that comes from your relationship is a healthy, well-adjusted child, you're still a winner. Solomon says in Proverbs 29:18, without a vision, the people perish. What's your vision? In all areas of your life. Think about it. What's your vision? If you have children, certainly those children should be part of the vision, if not the vision. They speak of your future. So give them extra love and stability. Children need stability. They need consistent behavior from you the same way the market needs consistent behavior from you. If you ever want to be consistently profitable, you better get your act together and start bringing to the market some consistent behavior. You have to be consistent with your children. They need structure. Give them extra love. Give them extra stability. Teach them what God says about life. Work at it, not for your sake, but for theirs. If the new shoots are lost along with the tree, all those years are wasted. So I charge you today with this task. Protect the new shoots, whatever the cost. And that's our good word for the day. Leave you with one last thing. Starting last night, 6 p.m. Eastern, week 61, we have issued so far 11 alerts, all of them triggered. 11 found their price target. So far, 0 have been stopped out, but that's not typical. We know we've had some really good weeks of late, by the grace of God, but we know that over the past year, you should expect 20% of alerts to be stopped out. We've had weeks of 0%, and we've had weeks of 10%, and I think we had a week here, a week or two ago, it was like 24%. Did that freak us out? Did that send us back to the drawing board? Oh my God, it doesn't work anymore. No. Pendulum swings both ways. So when you see 0 or 10%, some abnormally low number, just keep it in your head that 20% is the average based over the past year. Do I expect that to change? No. Well, won't you get better with time? I don't know. Doesn't matter how good I get. Or, what algorithm I create. Man does not have the ability to know the future. Read Genesis, it's right there. Man does not have the ability to change the past or know the future, and the two are inextricably linked for eternity. So the sooner you get that nonsense out of your head, the better off you'll be. It actually opens the door for you to become consistently profitable in the markets when you accept the fact that you're never going to have a perfect record. I don't care what they say on their website or in their email or even now in their text message. They may create the illusion that they don't get stopped. The only way they don't get stopped out is if they don't use a hard stop, which means eventually they're just going to go out of business. Okay? With me? All right. Thank you all for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. I'll be in Telegram later if you need me. Could we insert some awkward silence? Thank you.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.